Welcome to another weekly portfolio update here on The Last Investor. My name is Dan. I'm going to give a brief update on how my portfolio has performed over this past week. I'll then give you my thoughts on whether a second wave is coming and how the markets might be affected. But first, a big thank you to all those who have subscribed to the channel. And if you're new and you like the content, then of course, please show your appreciation by subscribing, as that would be really appreciated. So straight on to the portfolio update. This week, only 5 of my stocks have seen any significant change in value one way or the other. The first is CRISPR Therapeutics. Over the last 7 days, CRISPR Therapeutics has gone up by 6.4%. There's no specific reason why that has happened. Simply to say that, of course, there's been the euphoria in the markets this week with lots of stocks being purchased, and CRISPR Therapeutics has been a net beneficiary of that euphoria. And the next stock is Rio Tinto. It's gone up by 1.45%, which isn't a significant amount, and it's still holding up well in my portfolio. And then after that, we've got Centamin. Centamin has gone up by 2.6% over that period, and again remains a very strong part of my portfolio. The other stock after that is 3i. Now over the last 7 days, 3i has gone down 4.4%, and again it's one of those ones which is struggling at the moment and hasn't really benefited by that much, or doesn't seem to have been resilient to the current economic change. Then the last one to mention really is Crest Nicholson, and Crest Nicholson over the past 7 days has gone up 6.1%. One of the reasons for that is the UK government's recent announcement that stamp duty purchases of properties up to the value of £500,000 will be exempt, so we wouldn't have to pay full stamp duty on such purchases. And I think the effect of that, and what the government obviously hopes, is that that would stimulate the housing market, which seems to have seen a significant drop in house prices over that period. Hopefully we'll see some upward movement in the stock prices for these types of stocks in the not so distant future. And in terms of new stocks that I've added to my portfolio, well, I carry on with that trend of just buying new shares and new companies. This time round, it's Square. Now, Square is obviously a company that most people will be familiar with. It's a payment services firm that provides payments hardware and software for small businesses, payroll, and more. I mean, I really like Square actually, and I wish I'd purchased this much more sooner than I've currently purchased it. Jack Dorsey is a really visionary CEO. I think this company has got a long way to go in terms of growth going into the future. In the last 3 years alone, it has gone from negative earnings into positive earnings, and its cumulative annual growth rate in terms of earnings is 60% over that last 3-year period. So this is a company which I'm going to be dollar cost averaging into at the moment. I think it's seen a huge tear in its price. As you can see, it's pretty much up over 1,000%, which is a 10-bagger if you go all the way back to 2015. But in the last year alone, I think since that drop in March, it's gone up pretty much about 60%. So there's still a lot of room to grow there. I think given that it's still a fast-growing stock, yes, there's a huge amount of growth there to be seen and to be had. In the last 7 days, it's up about 7%. So on the 9th of July, I purchased £20 worth of shares, and as I said, I'm just going to dollar cost average my way into that one and see where we go with that one. So that's it for my new purchases. Then as for my overall portfolio is now back in the green. As you can see, it's up by £367, 0.4 pence, and which represents 0.38% increase. Obviously, that's not really a significant increase, but nonetheless, it shows the fact that my portfolio has become slightly more diversified, and also the signs of this recent euphoria as well. And now that leads me on to talk about the topic for this week, which basically is whether a second wave is coming and how the markets are likely to be affected by this. So last week in the news, we heard that Texas saw its highest ever recorded weekly death, and on Friday that increased to 95 deaths. This is following the reopening of the economy in June in Texas, and many countries have reopened as well, and it looks like there's an almost 2-month lag before the impact is then seen in the results itself. I think the stock market's euphoria has come partly because of the reopening, and so where we're now having a situation that we're now gradually seeing an increase in an upturn in both the positive tests for coronavirus and also deaths following that. I think I wouldn't be surprised to see things close down again, especially if people don't respect social distances, and if they don't cover up. So this is a real problem. Of course, if we don't see the second wave, that would be great. But if we do, and Texas is showing signs of a potential second wave, then how does this affect the stock market? That's the real question. I think retail will take a massive, massive hit. And for example, we've already heard in the news that last week, or on Friday, Brooks Brothers filed for bankruptcy on the 10th of July. So now is the time to consider companies which have been the most resilient during the first wave, and consider adding those to your portfolio. The ones that have suffered sadly are probably likely to continue to suffer further in the second wave situation. So based on that, I've been adding some tech stocks and pharmaceutical stocks, because those stocks seem to have been doing really well during the first wave. So the likelihood is that if we had a second wave, then those are likely to do well as well. Other stocks that seem to have done well during that period are gold stocks. And again, gold stocks have performed really well. And if we had a second wave, then I'll just adding those as well is helpful. In terms of stocks that have done pretty badly over this period, I think most bricks and mortar stocks have really taken the hit. I think UK in particular, the FTSE 100 has really suffered during this period. And that's a reflection of the fact that in the UK we don't really have a great deal of tech stocks per se, and we're probably bricks and mortar heavy on the whole. And that's something to bear in mind when considering stocks to buy. I talk about this in some more detail in my video about risk managing your portfolio, and I talked about the 6 categories that Peter Lynch splits all different types of stocks into. And if you haven't seen that video, I would strongly recommend that you watch that. So yeah, I think I'm going to leave it at that. It's a really short video this week, but hopefully you've got some benefit from that. And of course, thanks for watching the video, and if you've enjoyed it, please like, comment and subscribe. Peace.